Hey everybody, Brian here. It is Wednesday the 22nd. Let's look at this market. The S&P 500 did finish with a gain of a half a percentage point, and it is closing in on that little band of resistance that we've seen. So last week we saw that trend line was broken and had a little trouble with it, but now we're up to that horizontal resistance once again. And looking at that daily time frame, this is the key that if it can break beyond that, it looks like this market should be able to continue back up towards all-time highs. Our most important intermediate term level of support is really 209 to 209 and a quarter, and we'll continue to give it the benefit of the doubt to the buyers as long as we remain above that. We did see there were 1,750 advancers and 1,250 decliners today, so that's good to see. And as we are about halfway through earnings season right now, it's good that the market is holding on to its gains and behaving well as it is digesting the gains, and we're not seeing large negative reactions. You could look at this as a cup and handle if cup and handle is your thing to look at. Either way, it's a bullish looking scenario, and the pressure is building from the upside with these higher lows, and more repeated tests of resistance means it's likely to break out as the NASDAQ broke its downtrend line here today, and we're looking like we're headed up towards this next little potential area of resistance, 109 and a quarter rather, and getting back above that, then we should be able to continue to move, continue to see this bull market continue to move higher. The most important near-term support for this market is going to be down 107.50, 107.75. That's this little band of support, and that rising 5-day moving average. The Russell 2000 gained back 19 cents today after a little shakeout this morning. The key level of support down in here is 123.75 to 123 to 124 rather. The weekly chart, the daily chart. We've got this trend line that it does pass through this price, but this trend line is what represents the essence of trend. More important than that trend line, though, is this horizontal support just below that 124 level, and we've got the rising 50-day moving average there as well. It appears to me as this market is correcting more through time than through price, and that we get it back above probably 126 and a quarter, and then it looks like the buyers should be able to continue with another surge higher in here. The semiconductors, we were correct in looking at this market as saying it looks like it's ready to get going once again. It broke that downtrend line. It broke the prior resistance over here. And what we were looking at, was that this was the band of resistance. It was broken right on the open with that gap higher. The market ran almost exactly to daily R2 before it pulled back to the conjunction of the pivot, which is this red line, and the 2-day volume weighted average price. As it did that, if you're looking at semiconductors, you look at the 1-minute chart and get long as it's above the rising, flat to rising volume weighted average price, which was right here at this point, and a stop should have gone below the low of the day. That's what we discussed midday as well. It ran right up to daily R2 again, pulled back, made a higher low, and then you raise your stop according to whatever time frame you're engaging the market. But the semiconductors, buyers are back in control, and it seems as though it should be making another push maybe up towards that $58 level. Financials, I think, are still a waste of time in here. They're just in this bigger band, and then we've got this, this midpoint where we've been fighting with. We're below this prior little resistance, which seemed like it was going to be support. We've got a declining 5-day moving average. It's just no man's land in there, and I don't see any advantage to being involved in the stock. Apple today did break out, and as I had mentioned in the trading room, it was behaving well. What it had done is it got back above that 3-day volume weighted average price. So since the gap higher, and the 4-day volume weighted average price we referenced as well, because that was the gap lower 4 days ago, that held as support. Then it got back above the 3-day volume weighted average price and held, and I was talking about buying it above 127.50. It did that. We had our stop down at 127 and a quarter. That wasn't hit. The stock ran up to daily R2, and as I mentioned in the trading room, that was a place to take half of it off. At about this point, I said, this stock is behaving very well, and if you bought it for a day trade, consider only selling half of it up near daily R2 and holding the balance for continuation tomorrow, because we've got this breakout now. The stock made the higher high beyond that band of resistance we've seen, and now it seems to me it's got a good chance of even potentially gapping higher tomorrow. Someone asked me why did I think it had the potential to gap higher, and because a big name stock like this that a lot of people are watching often will gap and leave a lot of people on the sidelines there to chase it. So if you're you're not involved in it, well, if you are involved in it, as I said, I have a half a position. If you're not involved in it, I think, a pullback tomorrow down near maybe 127 and a quarter-ish, or 127.75, which would be today's VWAP as well. I would monitor a pullback and look for strength to purchase this because it does look like it has the ability to continue to move higher from here.